Alright, and welcome back to this next video on trading wedge breakouts. This is Justin Bennett, and in this video we're going to get into the details here about trading these breakouts. And the first thing that I want to point out here is we are on the 4-hour chart on the pound New Zealand dollar. Alright, so again, that's GBP NZD on the 4-hour chart. And the best thing to do when you're looking for these patterns is really to just kind of go through the market and look for areas that narrow in price. All right, so in other words, they form a triangle pattern. And obviously when you're doing this in real time, you're going to be actually watching the market as it moves here on the extreme right side of your chart. So you're going to see the market start to do something like this. And it'll be very easy to look at that and say, well, this looks like we're forming a triangle here or a wedge. And it then becomes very easy to trade a breakout from this pattern. All right, so in this example, we're going to look at a pattern that happened previously in the market. But as you're trading these patterns, they're going to be happening in front of your eyes, which actually makes it easier because it happens over the course of several days or even weeks. All right, so with that said, let's go ahead and jump into this. And we're just going to scroll back here. And as I scroll, keep your eye out for a pattern that looks like it forms a triangle. All right, now as we come back here, you'll notice that this area looks pretty good, and I'm just going to go ahead and draw some levels here. All right, so we have that lower level there. And this also looks pretty good. Now, obviously when this happened in real time, we would not have seen this area over here that actually respected this level once it passed. But as you can see here, the market, after it even broke out of this pattern, it did respect this level later in the market. All right, so, but let's go ahead and take a look at this area. And one thing I want to point out is there's a big debate about whether these levels should be located at the extremes of the candles or if they should go at the body. So in other words, should it be placed here? So it's at the body of the lower body of these candles here, or should it be placed at the wicks? Or as we learned, the lower shadow, such as here. Okay. Now I tend to place it at the lower extremes, but there's one rule that I always follow, and that is that I like to get the most touches possible. So there's really no hard and fast rule here, but it's whatever makes sense. So if you're looking at this market, and if I place it at the lower extremes like this, you can see that we have really 4 main touches off of this level. And so with 4 touches like that, I'm extremely satisfied with this level, and I'm also confident that when the market does break the level, there's a really good chance that it will respect that level as new resistance. All right, likewise here on this upper level here, if we draw this line at the extremes, okay, we get something like that. So we actually have 3 touches now. We have this first one here, the second one here, and the third one here. All right, so both of these look really good now. And you can see that we have a really well-defined wedge pattern. So essentially, once you have this drawn, you're really just waiting for the market to break out from the pattern. So once you have these levels on your chart, it's really just a matter of being extremely patient and waiting for that close outside of the pattern.